Good morning. We are on the phone with Nic Chahine. He joins us every Tuesday morning. He's an options expert. He has a Marketfy product,
Hello.
Create.
Uh-oh, can Nick hear us? Nick, we're talking to
I,
you.
I
Can you hear us?
yeah, now I can.
All right,
Oh,
Nick, I
okay.
was just
He had to put his earpiece in.
introducing you and Marketfy Maven of Create Income with Option Spread. Dennis and I are probably boring our listeners here talking about these boring consolidating markets. Nick, give us your take on it. There's probably no juicy premiums out there for you to sell.
There's all kinds of juicy premiums out there to
That
sell.
there
I'll
is
I'll start
probably.
with
Go ahead.
Dennis. Dennis, you mentioned you were lucky enough to get into Apple at the cheap levels of the flash crash or
Yeah.
thereabouts. Well, then high VIX is very good for you to put your asset to work by selling calls, covered calls against those assets.
What strike you got for me there, Nick? Because I've
No,
employed this strategy a lot.
but that depends on where you got in. But here's the thing: if you also said that you're expecting the VIX to drop, and if that's the case, that is definitely a way to go because you're going to sell it at the high VIX, and then the VIX drops. You either cover it
Great
by
point.
buying it back or just let it expire. So it all depends where you got in and
I'm
where
at 95.
you're in at 95. So you're just going
Yeah.
to have to find something that's going to be worth your while and still pay you. And time is also the important thing. So if you want to sell it this week, I don't know if it's worth it, but if you want to go out in time and say, okay, in October, it's not going to be higher than X, and I'm willing to get out at X. And like if you say it's not going to be higher than 125, then you collect 80 cents or so. If it's not higher than 120, you collect $2 per contract for selling covered calls. But that means you're ready to leave the stock at that
Yeah.
strike should you get called away. But there are worse things to happen than just to profit a little more and then keep the premium you sold and collected. So,
Even looking
and
out to December right now, I'm just pricing them as you were talking there because it got me interested. The 120s, I can get over $5 for the 120s if I went out to December, or if I want to even go far and say 130, which was, we were approaching there back to all-time highs. You get a couple bucks even for that as well. So there is some
yep.
juicy premium out there.
Yeah, but usually, if you cover usually people look for an event, they want to cover an earnings, but now you've got an event that is not directly Apple related. It's the Fed. That's what's
Right.
causing all the premiums to be higher. So you don't need to hunt that out in time. You can rinse and repeat every month. But if you just want to do it once and forget about it and say, hey, I'm good to go leaving the stock at 130. I bought it at 95. That's a good chunk of change. It also gives you a $5 if you sell and collect 5 or 4 or 3. That gives you a little leeway on the downside, too. So your break-even point is no longer 95. It's actually $3 or $2, whatever you can end up collecting
Right.
lower than 95. So and plus that's a good way to enter a stock. Like if you said you missed the entry point at 95, but you would like to buy it, then you can sell. I don't condone selling naked puts unless somebody uses it as a strategy to get into a stock. So
Yeah.
you sell a put at a level where the stock is very juicy for you. If the stock gets there, boom, you get put the stock, you owned it. Meanwhile, you collected some premium. If it doesn't get there, well, there's another strategy where you sell the put and buy some calls with the money. So now you're long the stock at 95 if it gets there, but if it doesn't, you're long the stock because you own the calls for cheap or free because you sold the put to pay for the calls. So these are good things to do even at high premiums or because of high premiums while you wait. But like you said, there is no conviction in this market right now because the fundamentals are hostage. They're hostage to headlines and sentiment. The headline, the major one coming this week, and the sentiment and how they're going to react to it. So this is a binary situation where all I'm doing is managing current risk. I'm not adding to the risk because I'm a fundamental trader and my fundamentals are stuck. And until they get unstuck, I can't lay a big fat one on. You know what I mean? So I just manage current risk. By that I mean if I have situations that may have been or could have been in trouble if the flash crash repeated, I want to be protected. It's hard to get that image out of your head when you just recently, just a few weeks ago, you saw these ticks fall so low. I mean, the price elasticity is here, so I have to protect against it, even though I am not calling for it.
And do you even think the situation, even after Thursday, is going to be, resolved? If they don't do the interest rate hike, then people will be saying, there'll be a little bit of a relief rally, but they'll worry about December. And then if they do it and there's like a decline in the market, there's a lot of people with still cash on the sidelines. They're going to be putting it to work. So, I mean, everyone's looking for this market to resolve this consolidation after Thursday, and, I'm not so convinced of it.
All I want them to do is to stop this pendulum effect. Usually when we have a big crash or correction, I don't know if you remember the last few big ones from '08 and after, we always have 2-3 weeks of big pendulum swings because of that price elasticity. So whatever happens on Wednesday or Thursday, I don't know what's going to happen as far as decision, and I don't know how the market is going to react. If they don't raise, yes, we're going to have the same situation, just like Greece. They kicked the can 4 months down the road, and then those 4 months expired, then here we are. We went through another round. But the second round was a little lower in magnitude, because we had just seen it. So we may have to repeat this down the road if they don't raise. But if they do raise, we'll get a resolution as to how the market will react on the rate hike. I don't know if I have enough faith that the traders will say, let's buy the rally. There's going to be, if they don't raise, we're going to have a pop, and I will call it a relief pop because that's something, quote, bad didn't happen. And those are usually shortable. I may give it a couple of days given the intensity of the anticipation here. So that's a relief pop. I usually short them, and it's made me a lot of money in the last year and a half. But if they are very bullish and not raising, if they say we're not raising, and not only we're not raising until we see the globe settles down. This is basically a punt into next year. That's very bullish stock prices. We'll have a rally that will last a little bit, and I won't be so quick to short it. So meanwhile, I can't put a lot of money to use here on conviction because the conviction is so weak. I don't know how they're going to react. It's like Vegas. Whenever there's an event, it's binary. You don't know the outcome. And if you knew the outcome, you don't know how they're going to react to the outcome. So it's like what am I investing in? I'm just betting. And that's not how I operate. So protect. I don't know exactly what to do because of the conviction, but I know what not to do. I don't chase baseless runs like yesterday in the pre-open. Joel, you said that it was kind of quiet. I don't know. We lost like the 60s level in the ES, and we ended up down 11 or 12 during the day and closed down 8. That's not pretty quiet. I mean, that was eventful. Apple was way higher than where it ended up. So people who chase lost money. So I don't chase baseless runs. I don't put huge money at risk, given I don't have a lot of, I don't know what's going to happen based on this binary event. I do guard everything against the worst case scenario. If I have a lot of money on the line, I better spend money and anticipate losing the money on defense. That's where you want to lose it. And I don't pretend that my opinion matters. The fundamentals are on hold.
What do you think is the worst case scenario with the Fed? If they actually come out and raise interest rates, do you think the markets really come down? Or like I was saying with Paul and Monica yesterday, I'm not even sure that they sell them off hard if they raise interest rates because it's kind of like ripping off the Band-Aid.
I think it's not up to the market, the equity markets. I think the movements that are going to happen in currencies and the bond market are going to drive the prices in the equity market, and that's above my pay grade and anybody else's pay grade this year because all the experts have been wrong for the last 2 years at one point or another on these two things. So you tell me how these two are going to move and how they're going to affect the equity markets. I can't tell you that. Therefore, I protect against, I don't short too tightly and I'm not too long too closely. And if I am, I'm definitely guarded. So if I have credit put spreads, which is a bullish position out in time for December, I buy cheap debit put spreads that will cover the disaster scenario for the next couple of weeks. And if I wasted my money on the protection, so be it.
It's nice to have that protection, though, just in case something bad happens. I mean, anybody who had the protection back on August 24th was pretty happy that they had that protection there because some of the individual stocks really got to some crazy prices there. What credit put spreads are you looking at right now? Are you putting any on here right now, and what strikes are you looking at?
I have not initiated new risk, but if I did, I'd leave room for about a 15-20% drop, and the premiums are so high that you can get it. So if you want to go out in time in the indices or in quality stock, like you can sell credit put spread in Apple for next April down in the 80, 70, 50, 60 level and
Really?
collect some premiums down there. So if you don't mind owning Apple at 70, sure, you can look out to premiums out there and use that high VIX to your advantage. It's free money basically if the markets don't collapse completely, and the fundamentals will kick in. The cash position will give it a floor. So there are plenty of things you can do. And if you're uber bullish, then you can sell some puts and buy some calls, like I told you, if you don't mind owning the stock at that put level. I don't condone selling puts because you get margin. The downside is so big that the margin requirement may change, and you may get called on, hey, you need more money because the price dropped X, and now the formula is this, and now we need more. So you got to get educated on that. But there are plenty of things you can do. But stay out. Don't do the weeklies. The weeklies like that expire this week. If something goes wrong, you cannot save that position. It immediately prices to your disadvantage, and you're stuck. The open interest, believe it or not, it's somewhat bullish setup this week, but I think there are a lot of positions that are set wrong that need to be resolved before the end of the week, that the move may be exaggerated based on that. In other words, there are a lot of people that got stuck in bad positions from the flash crash and the change in levels from that flash crash, and they're still hoping it still comes out their way, and I don't know what they're going to do in the next few days. So that's why it doesn't pay to fight every week. Every time I say I sell spreads, they say, oh, use weeklies? Yes, but not the current week. I go out in time.
Nick, you made one heck of a call on GoPro, and I think that when you originally made it, let's see, you're on. Nic Chahine here was on the show 1 week ago, and that would be the.
Actually, I think it was 2 weeks
It
ago.
was
I think
two
it was the
weeks.
stock's like 45, 46 bucks, and he had like a $36 price target or something, didn't you, Nick?
I did. I drew a box between $37.50 and $33, and I said it's going to be somewhere in the middle. Technically, it has room to go there.
Well, it's already went there and beyond some now. Currently trading
Yeah.
up a little bit in the pre-market, 33.30, 32.88 settle from yesterday. I mean, basically stepping in here, you're kind of going against a major trend here. What would make you turn a little bit positive on GoPro? What does it need to do in your opinion?
I bought calls in it yesterday, and
Ooh, he's positive now. I like that
well,
play too. I like GoPro down here too.
everybody hated. I hated it at 90 or whatever it was, and everybody hated here. So I was like, okay, maybe the opposite works. It's not serious money. I call it lotto money, meaning I dedicate X amount, and that X differs from bank account to bank account. But it's money I'm willing to walk away from. I gave it time until October for it to work out. But the thing is, in GoPro, this is the level. It's either going to be here or it's going to be like at the IPO price, which is in the 20s. But that will depend on the market. So if the markets won't fall apart, GoPro might catch a bid, and that's all I did. It's not on conviction. I didn't go out and invest tons of money into it. It's just a small lottery position to have me participate on the upside should it happen.
October what, Nick? October what? October.
Let me see here.
I thought you would
can't
go.
remember. I think it's the middle of October. Hold on.
No. I know you went. Yeah, with the. I was just interested with strike. I thought you might go a little. I thought you might give yourself a little bit more time than that.
But
Month and a half is
like,
a lot of time in this market.
yeah, it's either going to happen or it's not. I think the resolution as to what it wants to do is going to come sooner rather than later, and it's the October monthly that I chose. And as far as level, I chose the 40 level. Actually, October 23rd. Sorry about that. So one week past the monthly.
Oh, there you go. There's a good strategy.
A short squeeze could take you to there, though. Like, I mean, a stock could pop 5-6 points in a couple of days if you get the right squeeze come in. Some analyst upgrades a stock, scares a few of the shorts, starts the party going. I honestly don't mind it down here. I like that play.
And
and it's not a lot of money, and it'll get me positive if the markets do rally. If you know, I've been on this show, and I told you all I'm doing is shorting pops, and then going along them when I think they're oversold. So all these shorts have been paying off. So with this downfall, I've been lucky to collect some money from that. And this will get me participating on the upside. I'm not a negative guy. I just trade the price action that I see that's in front of me.
no, that's a great observation. Also, Nick, we got a few minutes left here, and it's kind of not being talked about a lot, but we do have a triple witch coming up, quad witch, whatever you want to call it, the third Friday of the month, and I guess the Fed is kind of just overshadowing that. Do you have any particular strategies that you use for these triple witch expirations?
No, every week there's expirations, so having the coincidence of several ones laying on top of each other, it usually creates more potential for shenanigans. But with the Fed event, who's looking past that? Let's take it one step at a time. I haven't even thought about that. A couple of things you guys mentioned. I think FedEx, you said cheap oil should help them. Well, that was the case in their last earnings report, and probably the one before that, and they were not well received. So I wouldn't go along just based on that thesis, because you just don't want to chase something that may or may not be there. As far as JCP, you guys mentioned above 10. I think this week it has resistance between 9 and 9.5.
Oh, okay, so a little bit below there. Okay, Nick, just any, you pretty much laid out all your theories and your strategies here. Anything else that you want to put out there for our investors, whether they be, short-term, long-term, anything moving forward here?
Gold, I thought, was a good long last week. Everybody was hating on it. If the markets fall, gold, in the long run, gold should go up. There's no fundamental reason for it to go down. I'm not long it, but I thought it would make a good long via like GLD call spreads or something. But in general, be careful. If you have risk, spend a couple of bucks buying insurance. Don't assume you can trade after the Fed. Remember on the Monday flash crash, I bet you your platform was locked up. So don't assume you can go out and buy insurance right as soon as the
That's a good point.
announcement happens.
Yeah, excellent point. Nic Chahine, options expert. He joins the show every Tuesday to discuss this week's option outlook. He's also a Marketfy Maven and the author of Create Income with Option Spreads. So if you like this options talk and Nick's strategies, you can get more of that on the Marketfy homepage. Nick, thanks a lot. Great input as always. We'll talk to you again next week.
Thank you. Always fun.